Today we are on Flamingo Drive in Miami Beach, and this house that you see behind me is a listing that's going to be coming on the market pretty soon. And this house last sold in 1999 for $1,175,000. So obviously that was a lot of money back then. But now, fast forward to 2022, they're going to be putting it on the market for $14 million, guys. I mean, can you imagine getting that much of a return on your initial investment buying this house? I mean, that is just unbelievable. 23 years later, now 23 years is a long time to own the house. It's not like this was a flip. You know, they just bought it yesterday like a lot of people are trying to do right now. But still, I mean, that is just a tremendous return. Let's see if they can actually get it. You know, $14 million is a huge sum of money, and only a handful of people in the entire world can afford a house like that. Just this week, mortgage rates hit a 16-year high. Now, the average 30-year rate mortgage is sitting at 6.81%. And this is like the 7th or 8th week in a row that mortgage rates have been consistently climbing. And after the new inflation report comes out this week, then those rates are set to possibly go even higher. So the funny thing about this, guys, is that at the beginning of this year, no one could fathom that mortgage rates would even go above 5%, okay? But I predicted that they would be at 7 to 8% by the end of the year. And right now, for just an average borrower, we're talking somebody with a 700 credit score, decent down payment, you know, average debt to income ratio, your 30-year fixed rate right now is sitting at 7.67%, hovering really close to that 8% mark that we were talking about. So we're almost there. Just one more rate hike away from the Fed probably, and we're going to be there, guys. And I think that prediction is going to be spot on, essentially. It might even go above these rates. And this is definitely one of the single most reasons I see home prices coming down in the near future, and already right now it's already happening in many places like here in Miami. And as borrowing gets more expensive, like we're seeing, and these home prices are not budging far enough, they're going to have to keep budging further down in order for the average person to afford to buy. It's just that simple. It has to come down, guys, because otherwise properties will just continue sitting on the market and people won't be able to buy them. It will be that simple. I don't think there's going to be anything more to it than that. What this does, unfortunately, is it's pushing desperate buyers who do need to buy right now into a vulnerable situation where the ARM loans are actually going up. So mortgage applications are way down overall, but the demand for ARM loans has skyrocketed because those loans are still in the 5.5% range, maybe closer to the 6% range for the average borrower, which will save you some money, but of course you're taking a much bigger risk. So then it comes down to, is this risk really worth it to get into a house right now? I don't see how it is, guys. I don't see the justification, because if you take that extra risk and the value of your home goes down, you're underwater on your mortgage, and you have an ARM loan on top of that that is going to reset at some point in the future. And the riskiest ones are the ones that offer the best rates. You know, when you just get like a 5.1 ARM or a 3.1 ARM, and the rate resets in just a few years. So it's very dangerous to do this type of thing, but more and more buyers are starting to opt for this type of loan given the state of affairs with where the mortgage rates are going. If you are somebody who's thinking about doing this right now because it's your only affordable option when it comes to your house payment, you need to be very careful, guys, because this could spell disaster for you if anything goes wrong. If you lose your job or you take a pay cut, anything like that happens, and then simultaneously your rate resets in a few years, you could be looking at losing your home. And you might not be able to sell or refinance or do anything like that because we have home prices going down. You know, if it was a guarantee that in 5 years from now your home would be worth more than it is today, then it might be a little bit less risky, but that can never be guaranteed. And in an environment like we have right now, I think that's highly unlikely. So just be careful out there. Now, what this is likely going to lead to is one of the largest wealth transfers in world history. because we have a lot of baby boomers who are entering retirement age, and also we have a lot of baby boomers and people in the silent generation that are unfortunately dying on a daily basis as well. And it's estimated that over the next couple of decades, the younger generations, people in my age group, are going to inherit anywhere between $30 trillion to $68 trillion worth of wealth from one generation to the next, guys. That is an unbelievably staggering number when you think about it. And I'm pretty sure if you're in this category, then you probably know who you are. You know your parents or your grandparents are wealthy or whatever, and people who are not know that you're not. Like, I'm personally not expecting any type of inheritance of any kind. I'm just not, guys. And I know some people out there probably are banking on this in the future, and that's fine, but you can't have it be your only plan for, having anything in the future. You still have to rely on yourself, because there's a chance that things could change. A will could change. The amount of wealth that you're supposed to inherit could also change because of financial problems with the generation that's supposed to be giving it to you to begin with. So there's a lot of things that can happen. And so one of the things this article says to do is to prepare with a financial planner and to, make sure your financial education is up to par. Now, I've never had a financial planner, and I don't think I probably ever will have one. I personally like being in charge of my own finances and figuring out the future of my money by myself. I don't feel like I really need anyone's help with that, but I also do a lot of studying on my own, and I feel like I can do that. But everybody who could be looking at some kind of wealth inheritance in the future definitely should have at least a solid financial education and kind of a plan on what they plan to do with that inheritance once they receive it. Because what ends up happening a lot of times, you have one generation like this that did really well, and then it gets passed down to the next generation, and they do okay with it, but they pretty much blow the majority of it, and whatever's left gets passed down to the third generation, and surely they squander the rest, and next thing you know, the third generation is back to being completely broke. And this is kind of the story that happens over and over again when it comes to inheritance. I mean, this is not an uncommon thing. So if you do think you're going to be getting any type of inheritance in the future, your best bet is to be ready for it and have somewhat of a plan of what you're going to do. Because if you don't, then that's going to be the easiest way to lose it into the future. It's the same reason why lottery winners end up going broke, because somebody that knows nothing about money all of a sudden is a multimillionaire. And what do? They go out and buy the biggest mansion they can find in town. They go buy, 5 Ferraris and 2 Corvettes and, put in the new swimming pool. They do everything like that without putting a single thought into, how can I make this money work for me in the future so I don't have to work no more? But instead, they have the short-term sight on all the things they've been salivating over for their whole lifetime that they could never have. And they just blow money on stupid things. So don't be that person. And for the people that are not expecting any type of inheritance, one thing I found a little bit alarming when I was reading this article is that about half of all millennials and Gen Zers who were surveyed, they think that they're planning on having all of their retirement income come from their 401k account in the future. And the reason why I find that alarming, guys, is just because we've already seen the amount of volatility that the stock market can have with past stock market crashes, and we're experiencing the latest one right now. And everybody will always say, well, it recovers just like real estate, and probably it will. But the issue with that, to me, and I'm not a financial advisor or planner, this is just practical common sense here. Say you're somebody who's looking to retire right now, and your whole plan was the 401k, just like these millennials and Gen Zers surveyed. Well, now you're in big trouble. Your 401k's value has dropped significantly, most likely, and you might not have enough money to retire. And flash forward 20, 30, 40 years into the future, who knows what the stock market's going to do? We don't even know what the future of our global economy is right now, with all these things going on with inflation and just how far out of control the debt crisis is here in the US and many other countries as well, the supply chain problems. Personally, I'm an optimist, guys. I know some of this can sound like doom and gloom sometimes, but I always have hope that things can get better. But I'm also a realist, and I also think that things will need to get worse before they do get better. And we could have a prolonged period where things are not so great. So my biggest issue with having the 401k be the sole retirement plan is that you don't know what the future holds and where your 401k account will even be in 20 or 30 years from now. And just take a page from, people who are retiring right now, take a page from their book, look what's happening to them, and say, do you want to be in this same situation? Because if you don't, then you need to have, additional funds, additional investments in other places. There's nothing wrong with having a 401k if your employer offers that and they do a match, whatever, you have some extra money in there, but don't make it your eggs all in one basket plan, so to speak, because that rarely works out well for anyone, it seems like. So, having several things going on when it comes to investment, having a little bit of real estate, having the 401k, maybe some cryptocurrency. A lot of people believe in that. I personally think that it does have a pretty bright future. So there's other things that you can do. You can own businesses. There's a lot of things that you can do to kind of spread the risk a little bit and hopefully have more than one source of income in retirement. So just think about that if you're somebody who is either expecting an inheritance or you are one of these people who just plans on retiring off the 401k one day combined with Social Security. But there's a risk, guys, that Social Security might not be there in 30 years by the time we get to retirement age. So you got to just think about all this stuff now, because even though it's far away, it comes quick. Look how fast the first 30 years went. Another interesting thing I read today was how homes that are in higher risk of flooding are starting to see banks not approve the loan and not give you the mortgage for properties like this. And now that we've seen the amount of destruction that Hurricane Ian caused, which definitely was not the first, but it's been the first one we've seen in a while. I think Hurricane Harvey was the last time we saw this level of flooding over in Houston a few years ago. So this has been one of the worst flooding events that people have seen in recent history. And this has got mortgage companies totally spooked, so much so that they are denying loans if homes are located in a flood risk area now. And the interesting thing about this is people are still buying properties in these flood prone areas. Obviously, this has not stopped people buying real estate in areas that flood, particularly here in Florida, for example. And the problem with this is obviously you have the demand for people to come down here or in other areas that are susceptible to flooding, but financing could be a thing of the past when it comes to this. So an interesting trend that's emerging with this as well, a lot of the mortgage applications that are being denied are for investment purposes. So you have a lot of investors still willing to take the chance and buy in these more risky areas, but there's much fewer applications for people that are looking to make these areas their primary residence. So the interesting thing about that to me is you have a set group of people that are saying, okay, we're willing to take the chance and put some money in. And by the way, they're putting lower down payments on these type of loans because it's riskier, right? So they're hoping that they can get into one of these properties, put down the lowest amount of money possible, and hope that they can make bank on the property for a long enough period of time where then if it does get flooded or totaled, whatever happens, that they were at least able to get their return on investment. I think that's the idea here. But I think what you're going to see in the long term is more and more mortgage companies start to follow suit and just stop writing loans in these areas that are at high risk of flooding. It's kind of hard to say what it's going to do to prices, but it's going to make it so that pretty much the only type of deal that can be made for those homes are cash deals. So, or maybe you do find a lender willing to risk it and they just charge an astronomical interest rate, or it's something more along the lines of a hard money loan, who knows. And to top that off, you can pretty much bet that the insurance companies will follow, because they're going to take note of this. They're going to say, well, if you can't even get a mortgage there, if it's that bad, then we're not going to insure you either. So that's kind of like the double whammy, guys. And obviously I don't want this to happen, but it's going to be interesting to see if it does and how this whole situation will play out. Because if you can't get insurance on a property and you also can't get financing for it, to me the logical thing is that the value of that property plummets, because now the only people who can buy it are cash buyers. And if you are going to put your hard-earned, your own cash into it, then chances are you're going to want a pretty sweet deal, especially to be responsible for the risk that comes along with having no insurance. So you're pretty much on your own. If something happens to that property, there's no safety net. You know, it's all going to be up to you when it comes to rebuilding and repairs and accidental damage, whatever. So get ready for that. Got one for sale here. These guys have been trying pretty consistently since 2021 to sell this place. They were asking as much as almost 19 million. Now they're asking 11 million. Tried renting it too, no takers. And to me, this kind of comes back to the discussion we had in a video about where home prices are going to go after this hurricane. And I think it makes sense for places that are in risky areas like this, especially the ones that have already been wiped out from the hurricane. For example, they're in a situation where they must rebuild there. Like everything is flattened in certain areas, or whatever's left standing is destroyed from water damage or too much wind damage, whatever. And when you have areas like this that the whole area has a problem like that, then I think local governments should be looking into how can we make better housing here, or more affordable housing that people can be more willing to take a risk on. Because at the end of the day, who wants to buy a $500,000 or $1 million home in a flood prone area that can easily just get wiped out with too much rain or the next hurricane? So a lot of you guys mentioned in that video ideas such as putting temporary housing in places like that where you can build something really cheap, or like an RV park where you can just move all the RVs out of the way in the event of a storm incoming, different things like that. And I don't know what the perfect answer or solution is to all this, but I do think areas that are going to stop receiving insurance, or the insurance premiums are going to be astronomical, things like that, they need to be looking into these alternative options, because the day's going to come where you probably can't get insurance, or you can't get a loan, or whatever you can get is just so expensive it doesn't make sense to get. That's going to put everybody there in a vulnerable situation when it comes to the value of their home, being able to sell it to someone else. You know, it also presents the problem of where do they go next. I'm always a proactive thinker, which I think a lot of people can tell from my videos. I'm thinking about these things now before it becomes a real issue. But we know that the government doesn't do that. They are reactive thinkers, and they don't do anything about anything until it's basically too late, and wait for the problem to blow up in everyone's face and then try to desperately do something about it, which is unfortunate. And just to give you guys an example, like I have family that lives over in Venice, Florida, and they didn't get hit quite as hard with the hurricane as they did down by Cape Coral and Fort Myers and down there. But their insurance premium went from $2,300 a year to $7,000, guys. So we're talking triple in just a year. So who knows what the following year could bring, or the year after that, with insurance companies being less willing to take on these risks along with the mortgage lenders. If you guys don't want to miss my next video, then make sure that you have the bell notification checked below. That way you'll always get notified of a new video from me. And if you don't want to wait for that, check out my next one on the screen right over here, and I'll see you over there.